Welcome back to the channel, everyone. Today I want to talk about and give all of the individual reasons as to why the MOASS is coming soon. So stay tuned and let's make some money. Now you may notice that this post is more focused on the GameStop MOASS. I do also want to incorporate all of the reasons as to why AMC will also squeeze, and some of those reasons are going to be different to the ones listed here. So now I want to dive straight in with the key information. So, the walls are closing in. A comprehensive look at the various ways the MOASS is getting nearer and nearer. So potential MOASS trigger number 1, the GameStop Immutable X and Loopring partnership can trigger the MOASS by organic growth. Now obviously this partnership will bring a lot of hype back to the GameStop stock and also to the AMC stock as well. AMC in turn has been issuing many NFTs, which is bringing more and more hype back to movie theatres and to AMC specifically. And on top of that, for the last few months, AMC has been consistently setting itself up to issue that desired 1-for-1 NFT. That one NFT for every one share in issue. In GameStop's recent 8K filing, they finally announced their NFT partnership. It says GameStop will use Immutable X as their first Layer 2 NFT integration for trading and minting other than Loopring. GameStop will not integrate any blockchain protocol other than Ethereum Layer 1 and Loopring into their NFT marketplace without first having integrated Immutable. And therefore GameStop has formally announced their NFT partnership to not only include Immutable X, but to also include Loopring as well. Not only could this NFT platform potentially cause the GameStop squeeze, which I'm going to touch on in a second, but also Loopring does actually have that partnership with GameStop, and therefore when the NFT platform is released, I do expect the Loopring coin to increase significantly. But also, if you didn't already know, Loopring actually have a patent on a decentralized exchange active in the United States Patent Office. Now obviously Loopring could create this decentralized exchange, potentially to replace the New York Stock Exchange. Many stocks could trade on this Loopring exchange, or many individual cryptocurrencies as well. This is obviously similar to issuing an STO on the tZERO decentralized exchange, but instead we could issue that same STO but on the Loopring exchange. I think GameStop and potentially AMC as well would be more likely to launch an STO on the Loopring exchange, considering that GameStop have already confirmed this partnership with Loopring. So effectively this GameStop and Loopring partnership could end up causing both the GameStop MOASS and also the AMC MOASS if both companies end up issuing an STO on the Loopring decentralized exchange. Back to the post, it says the partnership would enable GameStop, Immutable X and Loopring to dominate the NFT marketplace for both games and artistic creations. With not just the current size of the industry, but the anticipated future growth of the NFT industry, it could very well mean that when accurate price discovery is allowed again, the GameStop share price will naturally balloon over the next few years. This NFT marketplace for GameStop is likely to be opening in Q1 of 2022. I think it was supposed to open in Q4 of 2021, but due to natural delays, it's obviously been pushed back. However, over the last few months, the GameStop NFT website was advertising for creators and artists, although this is now since stopped, as they've obviously filled the positions. Therefore, GameStop already knows which NFTs are going to be listed on the GameStop NFT marketplace, and I guess are just adding the finishing touches. This will just add additional upwards buying pressure, and it will become too difficult for short hedge funds to continue to suppress the AMC and GameStop prices. Guys, most of you may not have a lot of confidence in the stock market at the moment. There seems to be tons and tons of market manipulation and market fraud that seems to be going entirely unpunished. And that's why I've also been investing in cryptocurrency, especially on this big dip. With BlockFi, you can not only invest in crypto, but you can also get up to $250 in free Bitcoin when you sign up to BlockFi using the link in the description below and make your first deposit. With BlockFi, you can not only just buy some crypto and forget about it in a wallet, but you can also make your money work for you, and you can earn interest on your investments up to 8.25% per year. BlockFi also has a rewards credit card with an introductory rate of 3.5% cashback on your purchases, also paid in crypto, so you can continue to accumulate more and more. There's also no annual fees and no foreign transaction fees, but unfortunately the card's only available in the US at the moment and not in the UK or in Europe. And guys, when you've generated a significant profit on your investment, instead of having to sell off your crypto and potentially missing out on the next run up and recognizing all of those gains for tax purposes, instead with BlockFi, you can take out a crypto backed loan. That way you can get cash to meet your day-to-day expenditure without having to sell off your crypto. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. Potential MOASS trigger number 2, GameStop has the technical means and also the platform available to provide shareholders with an NFT-based dividend, the issuance of which would trigger the mother of all short squeezes. AMC also has the technical means to provide shareholders with an NFT and soon will also have the ability to pay dividends. We've also just seen Adam Aaron announce yet another significant limited edition movie themed NFT for AMC guests. This time AMC is partnered with Warner Brothers on its blockbuster movie, The Batman. AMC is just continuing to move in the right direction with these NFT issuances, and it won't be long before AMC has a genuine business purpose to issue one NFT for every share issued. In terms of how an NFT dividend would work, it says in theory, dividends must be distributed to all shareholders, which is easy enough to do if it's a cash dividend, as cash is fungible, as in $5 is $5, regardless if it's provided by GameStop to their shareholders through brokers, or if it's provided by a short seller who's borrowed the stock from a shareholder. In the case of a non-fungible token or an NFT dividend, presumably GameStop will only make enough to go around for the shares outstanding, as in 76.49 million shares, or in AMC's case, 513 million shares. The SEC and many others in authority have categorically stated multiple times now that they do not believe there's any such thing as naked shorting. So therefore, surely GameStop and AMC would only need to make enough NFTs to cover the flow. So in the event that NFTs are given to shareholders as a dividend reward, the legitimate shorts but also the synthetic shorts would have to close their short positions. Because obviously it's not possible for them to synthesize those NFTs, and it's also not possible for them to create additional NFTs on top of the 513 million that would be issued. In GameStop's recent 10K filing, GameStop hinted that they could recall all of the shares in issue and remove them from the DTCC due to the sheer number of shares transferred over to ComputerShare. GameStop could also reissue those shares as tokens on the blockchain. That would obviously have the same effect as an NFT dividend, as all shares would need to be recalled and therefore all short positions covered, both the legitimate shorts and also the synthetic shorts. We've also got that new SEC ruling on the security-based swaps, which will be approved and coming into play shortly as well. This SEC ruling will obviously prohibit fraud and market manipulation or deception in connection with security-based swaps. It will make it significantly more difficult for funds like Citadel to continue manipulating the market for AMC and GameStop and to continue kicking the can on their synthetic short positions. Obviously at the moment these short hedge funds are kicking the can by effectively rolling their synthetic short positions with these security-based swaps. The security-based swaps allows funds like Citadel to transfer their short positions to other funds and then recall them whenever they see fit to just continually pass the can back and forth. There's also going to be a significant increase in position reporting of large security-based swap positions that's going to be made on a potentially daily basis. Again, this will basically mean that these large hedge funds would have to disclose their illegal or market manipulating security-based swap positions, and therefore they're likely to cover these positions, and that will be one less way they can kick the can. Obviously, we've got the ongoing SEC and Department of Justice investigation that's been ongoing for over a year already, as there was some large short hedge funds and market research firms like Citron Research that had computers confiscated in early 2021. Not early 2022, but early 2021. We've also seen smaller funds like Melvin Capital named on the Department of Justice investigation list. Obviously, Melvin Capital are linked to Citadel. Citadel isn't yet directly named, but we also know that this list of 24 names is so far incomplete, and the Department of Justice will be adding to this list. Now, obviously, we know that if the Department of Justice ends up making some criminal arrests, this can only be a good thing, but how could it actually trigger the squeeze? So it says some of these funds, such as Melvin Capital, are facing the prospect of being shut down for securities regulation infringements. It may only take 1 or 2 funds to fall, which would end up triggering forced closing of positions to potentially start a domino effect that also affects all the others. And with that, the MOASS could be triggered very, very quickly. And therefore, it may only take Melvin Capital being closed down and forced to cover their short position, which would end up creating a domino effect, causing all of the other short hedge funds to end up being liquidated and forced to cover their short positions. We also know that Melvin is already very, very close to being liquidated. Unusual Whales tweeted the other day saying that Melvin Capital needs to rise 94% from its current position to break even. We also have some interesting rising metrics such as the short borrow rate, which has been increasing over the last few days. Also, the utilization for both GameStop and AMC has also been rising as well. There's been a pattern specifically for both AMC and GameStop as to when AMC and GameStop is 100% utilized. After a week or two, we tend to have a significant run. The last time AMC was 100% utilized was back in May, just before the June run. Obviously, the AMC utilization has fallen significantly since then, but is again on the rise, back towards 90%. Guys, be sure to let me know down in the comments below whether you think that AMC and GameStop squeezes are coming soon, and what you think will end up triggering the squeeze. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.